Here is a quick example of what might be happening if your payment is going up. You're like, wait a minute, I got a fixed mortgage. This should not be changing. Well, if you've escrowed your mortgage, what happens is once a year, the bank, the lien holder, the servicer handles those payments. They pay your taxes for you once a year because every month they've been pulling aside money and putting it in a bucket, pulling aside money of your mortgage payment, putting it in a bucket, and they pay your insurance. Two things they cover for you and they manage. They handle that so that you don't have to keep up with taxes and keep up with insurance. However, it is a great idea to find out what did y'all pay this year? Inspect what you expect, right? See what they're managing. How much was it last year? What was it this year? Because when your payment goes up, it's likely because the taxes changed or the insurance company decided to charge a higher premium. Okay. So you want to shop those premiums every year and look at your taxes every year and fight it, get with your agent and be like, hey, listen, can you send me some comps in the area because they're saying my house is worth this much and it's really worth this much because all they did was a drive by to assess this value. And taxes will let you just pay them because. So just be prepared. I like to explain it like a cake, and you bake the cake, it's fixed, it's done. That's not changing, it's fixed. That's your mortgage. That interest rate you got, likely if you didn't do a buy down or something else, it's fixed. But you can scrape that icing off and change it, and it can change the entire cake a lot of times, right? So that is what I want you to think like in this too. Taxes and insurance, this is fixed. It's your mortgage. Taxes and insurance are on top, and it can be fluid, which can cause your payment to go up. And sometimes, depending on your mortgage servicer, they may or may not reach out about it. They might just say, we'll just adjust your payment. Here's a letter. Have fun. Or if it goes in the south direction, that's a happy day. Sometimes you're like, I just got this check. Woohoo. And oftentimes what's happening is they've accounted for previously all this money and put it in the insurance bucket, put it in the tax bucket. They've accounted for these things and the payment comes out lower and they're like, oh, so they send you a check or they let it sit there. So just check with your, I'm not a lender, guys. Full disclosure, I'm not a lender. I'm giving an explanation like I would give my clients. So for them to have some background knowledge to go talk to their lender and their mortgage servicer. So I'm just sharing this because it is a common question of what do we do? Why is my payment going up? What is happening? I got a fixed mortgage. And so definitely have a conversation with your lien holder, with your, if you're escrowing. And if not, don't forget to pay your taxes and insurance. Okay. And if people ask, well, do I have to have insurance? It's a smart idea to have that. Seek out financial advice around if you should or should not insure your property, if you've paid cash for it or whatever the case is. But if you have a loan on it, it is certainly definitely a prerequisite to being able to get the loan approved. And then if they find out you don't, they'll probably force place insurance on it that is going to be triple, double, quadruple the amount you would have otherwise spent on insurance. But it's, let's say you're just like, hey, I want to escrow. I don't want to escrow. I'm going to pay my own bills. Okay, that's great. Just don't forget. We get people off and it's like, I'm about to lose my house. Well, I forgot to pay taxes. Okay. Hope this is helpful. Let me know your thoughts. Of course, if you have more questions, keep reaching out. We're happy to help.